Mic test 1, 2, 3. Test. All right. Very good morning to all, and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here again, and today will be a brand new trading week, and it will be a pivotal week as well. Later, I'll share with you all why. So, good morning and welcome back to a fresh Daily Dose of Market Insights. Today will be Monday, the 27th of October, 2025. So, just to make sure that the sound check is good for everyone. So, I believe that give me a couple of seconds. Okay, just to make sure that the sound is okay. All right, so let's get started. So before we jump into the gist of the daily dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. All right, so just to make sure, just to do a check, test. Or I believe that everything is good in terms of the voice and in terms of the screen. Yeah. All right. So before we jump straight into today's full suite of the daily dose of market insights, which we will cover all the intraday technical outlook on all the 12 broad-based cross asset classes, ranging from the major US dollar pair, the major stock indices, and as well as the two key commodities, which is gold XAU/USD and West Texas crude oil. Let's have a quick recap what has taken shape over the weekend last Friday. And in terms of today's early Asia session, in relation with the relevant economic news flow data release and their impact on the broad-based cross-asset classes. So let's start with Friday first. So on Friday, we have a key US I would say that economic data, which is pretty much important, and very interestingly, it was released in the midst of an ongoing US government shutdown, where the other US related statistical compile economic data was not released. This was only released ahead of this week pivotal week, which is the US Federal Reserve monetary policy decision, and that data was the all-important CPI data, which is one of the core economic metrics that the Fed use to monitor and to decide their next monetary policy stance and decision. So the core inflation rate came in cooler than expected. So for the core inflation rate for the month of September, it dipped down to 3% from 3.1% in the previous month of August, and also dipped down below market expectation of 3.1%. And if you take into account of seasonality factor, the core rate on a month-on-month basis for September also dipped down lower to 0.2% from 0.3% that was printed in the previous month of August, and also came in slightly below expectation of 0.3%. So all in all, this has cemented the potential upcoming interest rate cut that will be almost 100% priced in on this coming Wednesday, which is on the 29th of October. So if you look at the CME Fed Watch 2 over here, okay, so the CME Fed Watch 2 has started to price in 97%, if I'm not wrong. Excuse me, I've got a bad cough. So bear in mind for a while. So 96.7, so take it as 97% that the Fed will potentially do a 25 basis point cut on this coming Wednesday meeting on the 29th of October. So that will be in early 30th of October, Thursday at 2 a.m. Singapore time. So what's interesting over here is that market is always forward-looking. They tend to actually look at what will the Fed be doing in the months ahead, since this has already been almost 100% penciled in. So for the months ahead, we will look at the aggregator tab. So also a very high chance of 96% Previously, it was about 80% or something like that, or before the release of the core CPI data. So after the release of the core CPI data, that actually increases to 96%, that the Fed will do another potential cut. So that will be a third rate cut for this year on the last meeting for 2025. So that will be on the 10th of December 2025 to bring the Fed funds rate down to 3.5% to 3.75% over here. And what's interesting over here is that for 2026, market is now looking at least 3 interest rate cuts with a high probability of 90% chance as well. So 94% chance the fourth cut will come in on the March meeting next year, 18th of March 2026 at 94% to bring down to 3.25% to 3.5%. Then thereafter, a high chance of 98% or 99%, I would say 98%, put it at 99%, that the Fed will do another fifth cut to bring it down to 29th of July 2026 to 3% to 3.25%. Then thereafter, before the year ends, not so high this time around, it's at 61%, but still above 50, 61% chance that the Fed will do the sixth cut to bring the Fed funds rate down to 2.75% and 3% on the last meeting of 2026, which is on the 9th of December 2026. So what we could see over here is that we start to see rather very high chance of 90% interest rate cuts in the next I would say that in the next 1, 2, 3, 4, 4 meetings, all right, down the road, all right, only about the 61% chance that the Fed will engineer a sixth cut on the last meeting of 2026, which is on the 9th of December. So that actually induces a liquidity pump into the US stock market. So that actually causes the US stock market to rise. And those who follow our daily dose of market insights on a frequent basis still recall that whatever corrective decline that was induced by Trump tantrum on the 10th of October, those are corrective in nature. So I do mention that I share you some elements that the ongoing medium-term and major trend and short-term trend is still remains bullish over here. Except for the short-term trend, there'll be some noises here and there due to that Trump tantrum that was in play three weeks, yeah, around 2.5 weeks ago. But overall, the bullish trend still remains intact over here. So the 3 major US stock indices all surged to fresh all-time high. So the SPX up 0.8%. The Nasdaq up 1.04%, the Russell up 1.24%, and the Dow Jones up 1%. So the top performer over here was the Russell 2000, marginally up, slightly above 1.24%, given the fact that the Russell 2000 company are more leveraged in terms of their gearing ratio as compared to the component stocks of the Nasdaq 100 and the SPX, given that the Russell 2000 is a small caps company, and small cap company tends to have not so of a strong revenue, free cash net inflow versus revenue ratios or versus gross profit ratio over here. So they tend to rely more on their gearing. So they are much more highly geared in relative to the component stock of the SPX 500, the Nasdaq 100, and even the Dow Jones Industrial Average component stock. So hence, any sign of increase or probability of increase in liquidity in the US financial system, so that being the case, is the higher odds of going down the road. There will be the next 4 or 5 meetings, we will start to see a series of 25 basis point cut potentially by the Fed. So that increase the earnings growth potential of the Russell 2000, and that explains why the Russell 2000 continues to outperform on last Friday marginally. So what we could see is that on last Friday, all the major US stock indexes except for the Russell 2000 close fresh all-time high. So that's the Dow Jones breaking above the previous swing high of 3rd of October and 21st of October, fresh all-time closing high for the Dow Jones. Very similar on the SPX 500 as well. Fresh all-time closing high, closing above the 9th of October swing high over here. And also the Nasdaq 100, okay, fresh all-time closing high, right, above the previous all-time high of 8th of October and 10th of October. Then for the Russell 2000 is playing a bit of catch-up over here. Right, still hasn't broke above the 15th of October peak over here. All right, So previously, it managed to stage a fresh all-time high, whereas other of the three major US stock indexes didn't. But right now, it's attempting to retest the current all-time high on 15th of October, which I believe that it may very high chance to do another fresh all-time high, given that the technicals remains positive. All right, that's for the Russell 2000. And also, interestingly, over here is that let me share with you guys the future inflationary expectation. All right, by looking at this particular graph here. So this line here is the 10-year break-even and the 5-year break-even inflation that has a kind of a rather interesting direct correlation with oil price. All right, so recently oil price increases due to the sanction where US imposed on Russia, forcing Russia to be on the negotiation table again to end that Russia and Ukraine so-called conflict that lasted for almost 3 years. So because of that, oil price went up, and you see a slight uptick last week on the 10-year and the 5-year break-even inflation, as represented by the dark blue line and the light blue line over here. So the 5-year break-even inflation rate is at 2.4%, and the 10-year break-even inflation rate is at 2.3%. But this break-even inflation rate takes as an implied market transacted, we call it pricing, based on the US Treasury bonds stripping out of inflation. So that is the TIPS, US Treasury Inflation Protection Board. So from there, we are able to get an implied market transacted view on what inflation will be 5 years down the road and 10 years down the road as of every end of trading day. All right. So despite the uptick that was seen last week in this 5-year break even, both on the 5-year and 10-year, both of them still remains below their high that was printed in the July of this year, and also printed at the start of Q1 this year as well. Okay, so still remains below Q1 and July levels despite last week tick up. So overall, I would say that break-even inflation, that means market view of where inflation expectation will be 5 years down the road and 10 years down the road, still remains muted. So that could potentially still supports the ongoing start of a new interest rate cut cycle by the Fed going forward, and that could last into 2026, which is net positive for the US stock market. But how about for the US FX market, the US dollar? So US dollar continues to trap within a range. So what we could see over here is that yes, despite market view of a much of a continuation of dovish Fed rate cutbacks going into 2026, the dollar index didn't actually move much on Friday. So the dollar index goes to trade almost unchanged on Friday. All right, over here, and in today's Asia session, there is a slight uptick of there's a slight bounce on the dollar index over here. Okay, give me a minute. Yeah, there's a slight bounce, okay, over here in the white this white small little body candlestick. So overall, what we could see is that it still forms a bit of hesitance by the candlestick price movement, a very small little body, as it continues to trade slightly below that intermediate resistance level of 99.4, which is this ongoing medium-term symmetrical triangle, pardon me, upper limit, which is the symmetrical triangle range resistance level depicted by this downward sloping gray line over here. All right, so overall, from a technical perspective, we continues to see a trendless US dollar movement going forward, given that it can't actually break down the lower boundary of this symmetrical triangle, and it also cannot break up above the upper boundary of this symmetrical triangle range configuration. So in the very near term, that means from an intraday basis, I do expect more whipsaw around the US dollar major pair. That means indicating the lack of directional trend. That means for short-term trading strategy, any little price action movement that skewed towards your favor, I mean, that should be more likely in terms of non-trending environment. That means given the fact that there will be much more whipsaw in the very shorter term basis. All right, so that's for the US dollar perspective over here. Then what's interesting over here is that gold price, yes, it came down slightly over here. So as we are speaking right now, the gold price actually fell in today's Asia session. Because gold price right now is actually there's two conflicting factors at play for gold. Number one, a dovish. Okay, so this gold price is down almost 1%, down negative 0.9%. So gold price is being a pull up recently due to a safe haven flow where US-China trade tension will see potential increased flow into gold. And also on the other hand, if the Fed continues to remain on a interest rate cut path, that means a commodity monetary policy that could reduce long-term US interest rates, and that would reduce the so-called the opportunity cost of holding gold. So at this point in time, from the very short-term perspective, today it continues to struggle. So later I'll share with you the key support level to watch and the key resistance level to watch on the intermediate term basis, on an intraday basis. So overall, it still continues to trap within a sideways range, but still holding above some key support level. So I cannot validate that we are now on a brink of a medium term / multi-week downtrend yet for gold, because support level still holds. So I got to respect that support level. And for oil price, so oil price continues to remains lackluster below our resistance level that we highlighted on Friday. So for WTI crude, it can't surpass very clearly the 63.55 resistance level that we have on Friday. Today there's a marginally gain of 0.3%. Later I'll share with you guys what are the key levels to watch out for today for West Texas crude oil. So what's interestingly, it can't break above that 50 level moving average resistance level, that despite that sanction being imposed by US on Russia oil supply / energy supply. So I still got to respect that technical level, all right, because price action can't break above that resistance, all right, over here. So with that, that covers the first segment of the daily dose. Let me now move on to the second segment, which is the intraday technical outlook on all the major broad-based cross asset classes, 12 of them that we cover today. So with that, let me expand my screen over here. All right, so pardon me about my voice due to a bit of cough in the last 2 days. All right, so let me take a sip of water. All right, here we go. So let's take a look at the euro dollar first. All right, so still called euro dollar. For those who followed my daily dose on last Friday, I do mention that we do have some positive bullish factors that's been formed. And this bullish factor is being highlighted in the light green box over here. As you could see my screen on 23rd of October and 23rd of October, on the 22nd of October during the US session, and on the 23rd of October during the European session over here, very similar to the box that was formed previously on 1st of October and 13th of October, where price action thereafter did that bullish breakout. And indeed, price action did that bullish breakout on last Friday after the release of that US cooler CPI data over here. It exit from the 116.30 upper neutrality level, where we also expect a much more bullish bias going forward. So given the bullish breakout of this 1.1630 level, I would be skewing to a much more bullish bias for today on the euro dollar over here. And my pivotal support, I will title it to 116 figure level. Okay, let me title it over here. Okay, so this will be, put it 116 figure level. Okay, so this will be 115.80. Okay, so I'll push it slightly tighter to 116 figure level as my Titan pivotal support level. Next resistance level to watch on the intermediate term basis, intraday basis, will be this congestion area here at 116.77, which is also confluence with the downward sloping 50-day moving average. Only a breakout above 116.77 will see a push up towards the key minor swing high area of 17th of October, 117.20, and 117.20 is a key minor resistance level, because it's also a potential neckline resistance of this ongoing minor double bottom formation. All right, if we take into account of this price action and this price action over here, a very clear two curvature that is higher low. All right, only a bearish breakdown below 116 figure level will negate or / invalidate today's bullish recovery on the euro dollar to see another choppy downward move to retest 115.80. Only a breakdown below 115.80 will see another round of minor corrective decline sequence, revisiting the medium-term pivotal support area at 115.30. Okay, maybe it's a zone over here. Let me put it as a zone. Okay, so it's a 115.40 slash 115.30. Okay, 115.40 slash 30. All right. Oops. Yes, so that's for the euro dollar. So now let us go next up will be the British pound over here, the pound against the sterling. Sorry, the pound against the US dollar. A bit tongue twisting was good due to my flu. All right. So the pound versus the dollar. So the pound versus the dollar. What's interesting over here is that last Friday we were neutral, and despite being less it actually underperformed against the euro because you know the euro very clearly started to shape a higher low, whereas there's no visible higher low that's being formed yet on the sterling dollar. So it starts to show a lower low over here. All right. So despite this lower low that's being formed, there's a pre-indication that this downside momentum has started to ease off by this bullish divergence that has been highlighted on the hourly RSI on last Friday, indicating that perhaps going forward the bulls will have an upper end as this minor we call it bearish momentum has started to ease off. So with that, I'll be using this key minor swing low area of 10th of October and 14th of October as my short-term pivotal support for today, 132.65. First resistance level to watch will be this clear minor congestion area where the bulls got rejected on 22nd of October and 20 rejected on the 21st of October and 22nd of October, and so confluence with the downward sloping 20-day moving average at 133.90. Only a breakout above 133.90 will give more credence for the bulls to search a higher high to test the next intermediate resistance zone at 134.40 and 134.65, which confluence with the downward sloping 50-day moving average. Only a bearish breakdown below 132.65 will open up scope to a extension of this corrective decline sequence towards the medium-term pivotal support area at 132.10, 131.70, which confluence with this orange line here, which is the key 200-day moving average. All right, so that's for the sterling dollar. Up next will be the Australia dollar, the Aussie dollar over here. So the Aussie dollar continues to benefit in this ongoing improvement in the China-US trade relationship over here. So why do I say so? Because of last over the weekend over here, there was actually a framework that has already been introduced between the trade officials that led by both sides. One will be U.S. Treasury Scott Bessent and China Vice Premier He Lifeng. So the U.S.-China trade talks over yesterday in KL yielded a framework ahead of Trump meeting with China presidency later this week. So this has been confirmed on this Thursday on the sideline of the APEC summit meeting in South Korea. So Beijing said both sides has reached an initial consensus, including fertility and ship levies, while Washington said China has agreed to make soybean purchases over here. And also with that, Scott Bessent also said that Trump's trade of 100% tariffs on Chinese goods is effectively off the table. All right, so these are rather rosy signs that there could be some form of potential trade deal that could be on the table when the two leaders meet on this coming Thursday, 30th of October in South Korea. So if there's no deal that's being done, there could be a further kick of the can down the road. That means extending that trade deal truce from 10th of November that is due to expire to a much more later date, 3 months down the road, as more potential positive rhetoric could be coming out from the communication from the respective press officials after the meeting of Xi and Trump on this coming Thursday. So by right, this should be shared on the first segment of the daily notes. My apologies, I forgot that, so I will share it now. So that potentially impacted the Aussie dollar positively as well, with a big gap up in today Asia session, given the fact that the Aussie dollar is a proxy of risk on so-called behavior of the market participants, and also if China-US trade relation remains positive, the Australia economy could also benefit from it, given the fact that the Chinese side may import more raw materials coming out from the Australia economy. So net overall, two bullish positive feedback loop feeding into the Aussie dollar as it managed to broke above our first resistance level that we highlighted on Friday, which is 65.30, now turns into a pullback support level. All right, so with that, I will tighten my pivotal support to last Friday US session low at 64.95, continues to be bullish on the Aussie dollar. Next resistance level to watch on the upside, 65.70, a breakout above this level potentially take us up to the key range resistance level of 1st of October and 7th of October, where price action remains, where the bulls remain stuck at this level at the start of this month at 66.20, 66.30 next. Only a bearish breakdown below 64.95 will invalidate today's bullish bias on the Aussie dollar to see a slide down towards 64.65/64.40, maximum 61.15/64 figure level, which is my medium-term pivotal support zone. That confluence with the 200-day moving average and as well as the expanding wedge range support that has been in play since 23rd of April 2025 low. So that's for the Aussie dollar. Excuse me. Next up will be the dollar yen over here. So the dollar yen continues to be the outlier over here. Despite the fact that we start to see the euro and the sterling, especially the euro, begin to gaining support, showing dollar weakness. The Aussie also showing dollar weakness, but the dollar yen is not showing dollar weakness yet because from a technical perspective, it could be still doing the residual 5-wave up towards 153.65, 153.90, maximum 154.50. So this is the wave 1, wave 2, wave 3, wave 4, and the ongoing fifth wave target. So 154.50 over here is very important. So 154.50 is the major resistance level over here. All right, which is being defined by the major descending trend line from the high of from the major swing high of 3rd of July 2024, where previously over here we start to see a steep sell-off in the dollar yen due to the MOF instruction to instruct Bank of Japan to sell dollar, buy back the yen during that point in time. Okay, so now from a shorter term perspective, the bias still remains bullish as it continues to shape that bullish residual fifth wave move up towards 153.65/90, maximum 154.50, which is the major resistance level that I share with you on the daily time frame. So I will tighten my pivotal support for today on last Friday minor swing low area and this clear congestion area over here that has taken shape on 14th of October and 9th of October. I will tighten my pivotal support to 152.45 to maintain that bullish bias for this residual push up for today. Only a bearish breakdown below 152.45 will invalidate today's bullish bias to see the start of a minor corrective decline sequence back down towards the lower limit of the range at 152 figure in the first step, followed by 151.50, maximum 151 figure, which confluence with the rising 20-day moving average that allowed the bears to survive on 17th of October recently. Okay, so that's for the dollar yen. And summing up all the 4 major US dollar pair intraday outlook. So now let us proceed to the major stock indices intraday technical outlook, starting with the Hong Kong 33 that's representing the Hang Seng Index over here. So as within expectation, the Hong Kong 33 push up and hit our resistance level 26,570 before pulling back at the first 3 hours of today's Asia session as we are speaking. So I will be still maintaining that bullish bias given the fact that the hourly RSI hasn't shown any bearish divergence yet over here, but it's now fast approaching into a overbought region again over here. All right, but not yet as overbought as previously on 21st of October, where it did that nasty intraday, nasty 2 days of pullback before doing that bullish reversal again. So with that, I will be using, I'll be watching for any signs of a minor pullback as a form to be bullish on any pullback. So the first intermediate support level to watch on this any form of any minor pullback will be the gap up over here that is formed in today's start of the Asia session. All right, at 9 a.m. Singapore time, which is 26,240, which is so confluence with the 20-day moving average. Maximum pullback allowable to maintain this ongoing bullish bias for today will be my Titan pivotal support level at 26,030, which is very clear former minor swing high of 23rd of October. And if we do the last bullish reversal from the low of 23rd of October, a minor one, that also confluence with the 50% FIBO retracement. So as long as this minor pullback didn't surpass below 26,030, maintain that bullish bias for the Hong Kong 33. Next resistance to watch on the intraday basis will be 26,935. Only a bearish breakdown below 26,030 will see a choppy dip down to retest 25,855, which is confluencing very closely with the 50-day moving average. Only a breakdown below 25,855 will see a deeper retracement to retest the all-important minor bullish reversal swing low of 25,510 that has occurred on 23rd of October. So that's for the Hong Kong 33. Up next will be the Nikkei 225. So Nikkei 225 represent Japan 225 representing a Nikkei 225 burst up as expected and hit surpass the resistance level of 50,090, 50,220 as now hit a fresh all-time high of 50,397 intraday as we are speaking over here. So this level here will be my pivotal, my intermediate support level to watch. So given the fact that the hourly RSI has hit the overbought level over here, but there's no clear signs of a bearish divergence yet. All right. So given the fact that there's no clear sign of a bearish divergence, I will be bullish in any form of a minor pullback to maintain my bullish bias for any opportunity. So pullbacks maximum support level allowable to maintain that bullish bias will be this tighten short-term pivotal support level, which is the former minor swing low, former minor swing high of 22nd of October, former minor swing high of 24th of October now turns into a pullback support and so confluence with the lower boundary of this shorter term minor ascending channel from the low of 10th of October over here. So using 49,410 as my tighten short term, okay, let me delete it, 49,410 as my tighten short term pivotal support level, maintain that bullish bias. Next resistance level to watch will be at 50,860 / 51,030 as it goes to end road up towards 51,900, 51,940 in the days ahead, which is a FIBO extension cluster level and the intersection of these two different time frame of ascending channel, one from a minor time frame, which is the hourly chart 10th of October, another one from a medium time frame from the daily chart, which is drawing down from the lows of 7th of April 2025 in a darker light over here in turquoise green over here. Only a bearish breakdown below 49,410 will invalidate today's bullish bias to see another round of choppy minor corrective decline to retest last Thursday minor swing low area at 48,845 / 48,440. Right, so that's for the Japan 225. Next up will be the Germany 30 representing the German DAX. So the Germany 30 in today's Asia session also broke above the 20-day moving average, which is my first support level. Now approaching our next resistance, broke above our first resistance level, now approaching our second resistance level that we highlighted on Friday, which is 24,480. So hereby this will be the gap support level as well, as well confluence with the 20-day moving average. So this will be the first intermediate support level to watch in any form of a pullback during the start of the European session. Maximum pullback allowable will be using last Friday minor swing low at 24,150 level over here. So as long as this pullback didn't surpass below 24,150, we will still maintain our bullish bias heading into the European session today for the Germany 30. First resistance level to watch will be 24,480. Above 24,480 may take us up higher towards this minor congestion area over here. Okay. This level here, which is the 10th of October minor swing high that was being formed at the start of the US session before Trump's did that tantrum, where it cascaded a significant intraday decline thereafter at that point in time. So that will be 24,630. All right. So 24,630, and if you do a FIBO extension taken from this ongoing bullish recovery, that also confluence with the one-time FIBO extension as well. All right, very closely. So giving in a very important intermediate resistance level to watch on an intraday basis. So however, if we start to see a price action dipping down below 24,150, then today's bullish bias will be invalidated to see another round of choppy sideways movement for the price action to retrace back again to test the 50-day moving average, and as well as to retest last Wednesday a minor bullish reversal recovery scenario last Wednesday US session, that will be at 23,995. All right, so that's for the Germany 30. Up next will be the major stock indices. Very quickly will be the US Wall Street 30. So the US Wall Street 30 hit our resistance level at 47,360 and surged higher in today's Asia session as it printed a fresh all-time high at 47,530. Hourly RSI now is at the overbought level. All right, over here. So far there is no bearish divergence that's being seen, but this overbought level is higher than the previous overbought level, the recent one on 3rd of October. So there could be signs of a minor pullback. So minor pullback level to watch will be at 47,360, which is very close to the gaps. Okay, give it an area. So this should be a zone. Oops, over here. Okay, so this area here. Okay, this should be the zone to watch out for. The gaps zone, the gap up zone in today's Asia session. 47,360, 47,280. Maximum allowable for the pullback will be very clearly this former all-time high area that was tested on 3rd of October, tested again on 23rd of October before shipping that bullish breakout on Friday, turned into a critical key short-term support level at 47,860. So as long as this pullback didn't surpass below 47,860, my Titan short-term pivotal support for the US Wall Street 30 for today, representing the Dow Jones Industrial Average, we will still maintain that bullish bias on the US Wall Street 30. Next resistance level to watch on the intraday basis will be 47,890 / 47,960, followed by 48,190, 48,240 in the days ahead. And if we do that steepen ascending triangle, taking into account of the low of 17th of October, that also conflicts with the upper limit of it. All right, over here. Only a bearish breakdown below 47,086, that will invalidate today's bullish bias to see another round of choppy minor corrective decline to retrace back down towards 46,760, maximum 46,425, which confluence with the rising 20-day moving average. All right, next will be the SPX 500. So the SPX 500 continues to trade higher as well, hitting our second resistance level that we highlighted on Friday, 6,850. So that being said, price action also of the hourly RSI is now at the most overbought level since 12th of September, but there is no clear bearish divergence that is being formed yet over here. So with that, given that is at a rather extreme overbought level in terms of very short-term basis, so there could be a form of minor pullback. So minor pullback will be the gap support at 6,110 or 6,812, 6,810, 6,800 level. Maximum allowable will be this key range resistance level that was the previous all-time high, broke out on last Friday, now turns into a critical pullback support, and also the lower boundary of this minor ascending channel from the low of 17th of October, confluencing at 6,770. So as long as this minor pullback is surpassed below 6,770, we will still maintain the ongoing bullish bias. Next resistance level to watch will be 6,910, 6,920, followed by 7,000 / 7,015 in the days ahead. Only a bearish breakdown below 6,770 will see a choppy corrective decline sequence to see a deeper retracement back down towards the rising 20-day moving average, confluencing at the next near-term support level at 6,720 next. Right, so that's for the SPX. Lastly will be the Nasdaq 100. So the Nasdaq 100 continues to surge higher as well, hitting our second resistance level, 25,590, 25,640. So given the fact that it also the hourly RSI is also at the overbought level, and this overbought level is higher than the previous overbought level of 9th of October. All right, and it's the highest overbought level since 5th of September on an hourly basis. So given the fact of such extreme overbought level on a very short term, there could be a minor pullback towards the gap area over here at 25,420 / 25,400. So as long as this minor pullback didn't surpass below 25,225, this is a very critical range resistance level that can't break on the previous all-time high on 9th of October for the entire month of October and managed to break up finally on last Friday. So 25,225 will be a critical key short-term support level to hold any pullback to maintain this ongoing bullish acceleration phase for the Nasdaq 100. Next resistance level to watch will be at 25,940, 26,020, which is a Fibo extension level. All right. Okay, allow me to take a sip of water due to my bad cough. All right, thank you. So now a breakdown below 25,225 will invalidate the bullish bias on the Nasdaq 100. Then thereafter, we see a choppy corrective movement back down towards the next support level, which is confluencing with the lower limit of this minor ascending channel from the low of 17th October at 25,000. All right, let me put it in writing. All right, 25,000. Okay, so that also confirms very closely to the rising 20-day moving average as well. So that's for the Nasdaq 100. All right, so up next will be the commodities market over here. So very quickly, the commodities market, let's start with gold XAU/USD. So gold XAU/USD still managed to hold above the 20-day moving average in today's Asia session, despite the earlier intraday sell-off, and also holding above this medium-term ascending channel support previous that was running from the low of 22nd of August 2025 low. So given the fact that it hasn't broken below 4,005 slash 4,000, which is my medium-term pivotal support zone over here, we'll still maintain that bullish bias. So resistance level to watch for today will be at 4,155. So this level can't break up since Wednesday. All right. So very important for the bulls to have a heads up above 4,155 in order for it to gain more traction towards 4,203. Then thereafter 4,267 next in a very short term basis in the days ahead. So, however, a bearish breakdown below 4,000 level, so that will totally invalidate the recovery scenario and kickstart, or I'll put say that kickstart a very high chance of a multi-week corrective decline sequence. So in first step, exposing the next two intermediate support level, 3,943, followed by 3,895 slash 3,864 over here. All right, so that's for gold XAU/USD. Lastly, will be the West Texas crude oil. So the West Texas crude oil can't surpass above the 50-day moving average after that squeeze up being triggered by that Russia sanction news flow by US. Russia oil sanction news flow by the US. So still no change, still using that 63 figure level as my short-term pivotal resistance level. But for today, I do have a downside trigger level to look out for. So the downside trigger level to look out for will be last Thursday minus swing low at 61.56 over here. So let's put it writing. 61.56. All right. So a breakdown below 61.56 will potentially see a intraday downside acceleration to retest 60.50, which is a 20-day moving average. Failure to hold above 60.50 will see further push down towards 59.15 in the first step. Only a bullish breakout above 63 figure for West Texas Oil that will invalidate the intraday bearish bias for West Texas Oil and see a further squeeze up towards 64.55, maximum 65.70, which confluence with the key downward sloping 20-day moving average. Overall, the hourly RSI also supports a bearish down move, because if you look at the hourly RSI, if we could draw a support level over here, now it's testing this support. But if you look at the lower high, it still continues to see a series of lower high over here. So this RSI ascending support confluence with the downside trigger level on the intraday basis at 61.56, but continues to strip a series of lower high, indicating a lack of upside momentum as indicated by the hourly RSI. So that's for West Texas Oil. So before we go, let's have a quick look at the economic calendar. What are the key things to look out for today? So in terms of economic calendar for today, so today will be the give me a minute very quickly, 27. So today will be a rather quiet session over here. So no really that key tier one economic data, except for perhaps this tier two one, Germany info business climate. So this is probably like a business sentiment, business sentiment indicator, where the info we call it research, we call it center, do a poll to Germany selected businesses to poll their sentiment towards Germany business climate. So that will be in the month for October. So the numbers still almost the same as the previous month, 87.8 versus 87.7 for the previous month of September. So that could potentially influence the euro dollar, the euro crosses, and the Germany 30 CFD index. And thereafter, it's a very, very quiet session over here. So the interesting part will kickstart in the middle part of this week. Why very important? Because we have the FOMC meeting at 29th of October, and also Trump C meetup on 30th of October, which is Thursday. And also don't forget, this week we have the 6th I would say that 1, 2, 3 are 5 mega cap technology stocks. We call it earnings results release after the close of the US session. So kickstarting up from Wednesday, 29th of October, after the close of the US session. So in Singapore time, that will be 30th of October, after 4 a.m. right after 4 a.m. So right after 4 a.m., 30th of October, 4 a.m. Singapore time on Thursday, we have the release of Microsoft, Meta, and Alphabet. All right, 3 of them. Then followed by on the previous day, 30th of October. So Singapore time will be 31st of October, right after 4 a.m. That's Friday. Apple and Amazon will report their Q3 earnings results. So all these 5 mega cap US big tech stock constitute, if you add them together, roughly about 40% of the weightage of the Nasdaq 100 and around 30% plus weightage of the S&P 500. So it will be a very volatile session for the major US stock indices, especially the S&P 500 and the Nasdaq 100, given the fact that we have a confluence of key risk event that is taking shape this week. So I'll share more about that and the updated key levels on the relevant instrument as we approach this pivotal week for this week. So I'm Kelvin here, signing off. Hope that you guys have a great day ahead, and we shall speak again tomorrow. Thank you.